Okay, good evening and welcome back everyone to our Nordic live market analysis session. My name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I look forward to spending some time and going over the Nordic markets like we do every 4 weeks to give you a better understanding as to where they currently sit. What do the economic numbers currently look like? And today we're going to do something special. We're going to talk through how you can utilize the OptionsPlay portfolio to track some of the trades and paper trade ideas that you might have in the market and help you track a portfolio of trades for a paper trading account. This is really useful for those of you that are starting out with options or even trying to improve your options trading to be able to track a trade without trading real money in your account. This gives you the ability to better understand how option strategies perform in market conditions or various market conditions, and being able to do so all from your OptionsPlay platform that's free of charge to all Nordic investors. So before we get started, what we're going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. So during today's session, what we're going to do is we're going to go over the options education agenda just to give you a sense for what is coming up in our education calendar. We're going to do the Nordic market review. We're going to look at the major indices. We're going to break down the individual sectors. We'll take a look at sector rotation, some of the ideas, as well as economic indicators. And for all of the ideas that we're going to look at here today, we're going to show you how you can paper trade the ideas and track a portfolio of these ideas using OptionsPlay. And then what we'll do is we'll actually come back to those trade ideas 4 weeks later on our next next live market analysis session. We're going to look at them together and see how they've performed and give you a better sense for how different strategies could work out for the different ideas that you may have. And then at the end, we'll open this up for Q&A at the very end. So looking at the calendar here today, we're doing the Nordic Market Outlook session. This is dedicated to give you a better understanding as to where the current market sits and some of the ideas that you could play out here in this market. And next week, or 2 weeks from today, we're going to talk about our next option selling strategy, which is selling cash secured puts. This is a strategy that I think is one of the most underutilized option strategies by investors, especially for those of you that buy stocks or ETFs in your portfolio. Selling puts is one of the better ways, in my opinion, to capture some income while you attempt to purchase those stocks or ETFs that you want for your portfolio. And then 2 weeks after that, we're going to come back to our Nordic market outlook here again. And during that session, we're going to revisit the trade ideas we're going to discuss here today. We're going to see how they have performed and give you a better sense for how you can use OptionsPlay to track the trades that you're making and see how they're performing. And we'll try out different strategies and see how the different strategies perform in this market environment. And then we're going to do a separate session just on paper trading and using the portfolio before revisiting the Nordic market outlook here again on August 4th. So for all of you that are live here today, you're automatically registered for all of these futures events. But if you're watching a recording of this on YouTube, or if you're currently watching this somewhere else, you can sign up for all of these classes by going to trade.optionsplay.com/OMX. If you're on the session live today, you're already registered for all future sessions. But the primary question that I want to help investors answer from today's session is, are the Nordic markets starting to get overextended, and are they at risk of a potential pullback here? So my name is Tony Zhang. I'm the chief strategist here at OptionsPlay, and I want to share with you my technical research, the economic indicators that are currently that we're watching here in the Nordic countries to get a better sense of how we can answer that previous question. So when we look at the OMX S30, we have struggled to get past this 2280 level here. This is a double top that has recently formed here on the OMX S30. So what we really need to see is a push above this level in order for equities to resume that continuation higher. However, since we've had this move here to this sideways move, as you can see, momentum has started to decline here. This is not particularly constructive of a breakout here. From this, looks like it's more likely to see some more sideways action here on the OMX S30, more consolidation, which is typically normal after what has been a very strong move from the beginning of the year. We were at about 1840 at the beginning of the year, all the way up to 2240. After such a strong period of outperformance, it's normal to see markets consolidate for a while before they continue to move higher here. So this is a key level to pay attention to, 2280. If markets can break above that, that would be very bullish here for the broader markets. But currently momentum is starting to slow down. We're starting to see some deceleration in terms of the markets, a little bit of exhaustion here. So certainly more sideways, more consolidation is very possible. When we look at the Copenhagen 25, this is where markets look a little stronger than in Stockholm, because we've actually broken out above those highs in late April, and largely we have held those lows, that resistance level now as support. So we found a bit of a base here that has built between 1780 and 1820 or so. We really need to see, similar to the Stockholm markets, a breakout above these levels for these bullish trends to continue. But the Danish markets have largely been range bound for multiple months before having this small breakout here. As you can see, if you look at the larger picture here, this is a 1720 breakout level that has been retested as support and is now continuing higher. So the Danish markets looking a little stronger here at the moment versus the Swedish markets. When we look at Helsinki very similar to the Danish markets, in a very strong uptrend that recently broke out above, let's just call it a double or triple top here at around 5,200 level, broke out above it. That certainly, again, is quite bullish. If you look at the long-term chart here of Helsinki, very strong and steady uptrend here, just a very steady uptrend that we continue to see this channel that we're currently in. We are trading against the upper bound of that channel, so you do potentially could see some small declines before a continuation higher here, but very orderly move to the upside in this particular channel for Helsinki right now. And Oslo, similar to Copenhagen and Helsinki, after a period of consolidation here, sideways consolidation, you finally got the breakout here. It is also similar to Helsinki, near the upper bound of this range. Now, when we look at Oslo, which is fairly heavily exposed to oil and gas, as crude prices continue to climb, this is going to provide perhaps a stronger tailwind for Oslo versus the other three Nordic countries. The question is whether gasoline prices will continue or oil prices will continue to rally. So far, demand side on oil looks fairly strong. Supply side seems fairly constrained by OPEC here. So a small decline here could potentially provide better risk to reward for longs here. But I do think that in the short run, you have a little bit of overextension here for Oslo, but overall remaining in the strong bullish channel across the board for most major indices, with I would say actually the Swedish markets at the moment looking weaker out of the other three. Being the biggest one. But when we look at the economic numbers out of these countries, Sweden actually continues to look fairly strong. Manufacturing PMI last month did get revised down to 69. This month was 66.5. So still on a strong upward trajectory when it comes to manufacturing PMI. Services PMI accelerated again here in May. That is very positive in my opinion. So when you look at these numbers, this certainly points to a potential for the OMX S30 to break out above that level that I was referring to. I think it was the 1870 level on the OMX S30. When we look at the fact that manufacturing remains on this upward trajectory that we want to see, and services start to accelerate after having multiple months of kind of sideways, small improvements. We've seen major acceleration here from April to May. So this is constructive of the Swedish economy getting back slowly to normal here, especially as services PMI is the highest we have seen in multiple decades here in Sweden, versus manufacturing still also remain, while not at the highest level, but one of the highest readings we have seen over the past few decades. So across the board, you have both sides of the economy showing strong gains on the manufacturing and services side of things, and services certainly pointing us back towards the reopening taking a hold here in Sweden. So that is further evidence that perhaps we can continue to see gains here to the upside. The other thing to pay attention to is 10-year bonds for Sweden continues to decline here, down to 32 basis points. So we were in this range around 30 to 45 basis points. We are now at the bottom end of the range. The question is, will interest rates actually fall again below this range? If it falls, that certainly puts equities perhaps into even a better spot where it could potentially break out higher. If we do continue to see this in a range bound level, that could lead to equities to be more range bound. So this is one really important indicator to pay attention to here, is that Swedish 10-year bond rate, largely a driver here of the economic picture. Now, when we look at sector rotation, this is really where you want to pay attention to which sectors are strong, which sectors are leading, which sectors are lagging behind, to give you a better sense for where there is potential better opportunities for both longs and shorts. So first of all, technology has taken a big round trip here, if you will, from improving into the leading category, now moving in the right direction here. You have consumer discretionary and consumer services versus consumer goods. Consumer services starting to decline here, consumer goods starting to move a little bit towards the leading category here, industrials also moving in the right direction here towards leading. But then at the same time, you have quite a few sectors moving in the wrong direction towards lagging. You have healthcare, you have financial services, you have energy, you have telecommunications, utilities. The only one kind of moving towards improving right now is basic materials. So right now, the sector rotation is not particularly healthy right now. You have far more sectors moving towards lagging or in the weakening category than you have moving towards leading and in the improving category. Now, this could very much shift. So far in Europe, we have not seen much of what I would consider unhealthy sector rotation. For the most part, things have been fairly balanced. You have an equal number of sectors that are moving higher versus an equal number of sectors that are moving slightly lower or losing that relative strength. That is, generally speaking, healthy for a market rally. But right now, when we're looking for opportunities here in this market, you want to make sure you pay attention to which sectors are strengthening and which sectors are weakening here. So with that, what I want to do is I want to turn back to OptionsPlay, and we want to explore some ideas in the broader markets, just to take a look at, the equity markets, talk through some ideas with you, and more importantly, I want to show you how you can paper trade these ideas using OptionsPlay and track the trades and see how they perform, because that's going to help you better understand different option strategies and testing them out in your paper trading account before you execute them in your proper trading account. So let's take a look at something like, let's look at Electrolux, for example. So let's take a look at consumer durables. Looking at Electrolux, this is a stock that recently had a very strong move here to the upside. Very strong move from about 194 to about 260 crowns. It's pulled back about half of that move down to about 225 or so, and is now starting to resume its uptrend. So perhaps this is a stock that you think is going to revisit that 260 all-time high, around 261 or so. And there's a few ways that you can play this. You can buy a call option, you can buy a call spread. So I think it's a good way for us to use the paper trading account is to test out these two strategies side by side and see how they actually perform if Electrolux was to rise here over the next couple of months. And we'll come back here in 4 weeks and revisit this trade. Or we can take a look at this, maybe at that time Electrolux continues on this downtrend and understand how much did we have at risk for both trades. So today what I want to do is I want to walk you through how you can effectively save a trade for your portfolio and paper trade this Electrolux trade using OptionsPlay. So within the platform, which all of you have access to free of charge, and if you don't have access to it, I'll show you how to register for this during today's session here. But for every strategy you look at using the OptionsPlay software, there is a blue share button on every single trade. Now, when you click on that blue share button, what it gives you are options that allow you to share a trade, or you can save the trade for yourself. So as you can see here, you have this button here that is a link icon. When you click on that, what happens is it generates a link, and that link is saved in your profile. And you can always go back to that link at any time to bring up the trade that you had saved, and OptionsPlay will actually track the performance of the trade for you. So let's just go ahead and do that here. Let's say I'm looking at the Electrolux 235-260 call spread here. This is a debit spread for those of you that are relatively new to this strategy. It's a strategy that allows you to risk a fairly small percentage of the stock's value, in this particular case, 1,015 crowns on a 235 crown stock. So the equivalent of about 4 shares or so will allow you to control 100 shares of the stock. And for 1,015 crowns in risk, I can potentially make 1,985 crowns in potential rewards. So if I save this particular trade, when I click on that link button here, what it does is it saves the trade and it generates both a URL link and a share link. Now, what you can do is you can see these links in your profile. So for example, when I go to my profile, you're going to see a section here called shared trades. And when you click on the shared trades button, it'll have all of the trades that you had previously saved or shared. And you can click on a trade such as this one that I created on June 9th, which is, I'm sorry, the trade that I just made today. And when I click on it, what it's going to do is it's going to bring up the trade in OptionsPlay that I just saved. And not only does it bring up a previously saved trade, it also tracks the trade P&L. So because the markets are closed right now and it hasn't moved, my trade P&L is 0. But when I open this trade up tomorrow, you're going to be able to see how this trade performs. And you can all do this in your own portfolio when you have OptionsPlay. But you can also take the link and you can share it with a friend. So for example, I'm going to take this particular URL, I'm going to copy it, and I'm going to share it with everyone here in Zoom. So let me copy this link and let me paste it in the Zoom chat window. So now in the chat window, everyone has access to this link. You can click on that link and it will bring up this particular trade on your options platform. And you can do this for as many trades as you want. So let's do it now for the call option. Before I did the spread, now let's do it for the call option. And when I do that, it's going to, again, generate a link that I can share with you again in the chat window. So now you have access to both the call and the call spread links so that you can track this trade over the lifetime of the trade between now and the August 20th expiration. Like I said, I'm going to save these for our next session in 4 weeks' time. We're going to come back. We're going to evaluate whether or not Electrolux did move higher here towards that 260 crown target price that we may have on this. And if it did, we're going to see how the call option performed. We're going to see how the call spread performed. And if, let's say, it continued to move lower, we're going to see how much money did we lose on both trades and compare them side by side. This way you'll have a better understanding as to perhaps going forward what type of option strategy you might want to trade for your portfolio. And this is all designed so that no matter what strategy you're in the process of learning or trying to better understand, you can take any strategy that you're interested in and save it into your own profile and come back and track that trade. Okay, so just to remember, any trade you're looking at, click on the blue share button. Then click on the link here on the right-hand side. And once you click on that, it'll save the trade in your profile. And all the trades that you've ever saved, you can go to your profile and it's under the section of shared trades. So those are the 3 steps. 2 steps to generate a trade, 1 step to go back and look at all of your trades. Under shared trades, all you have to do is find the trade. You can click on the link. When you click on the link, it will open the trade in your profile. So let's go back and let's take a look at some other ideas that we can take a look at. Let's look at H&M, right? Very popular stock that many of us follow. H&M has had a pretty strong run here, despite some of the challenges it has run into in China, and it is on a pretty steady, I would say, uptrend. And right now it's near the bottom of this bullish uptrend here. So perhaps you think H&M is going to bounce higher here. Maybe not as high back to its all-time highs, but maybe back to 218 or so. So a few different ways that you can play this, right? Maybe you can sell a put option if you want to buy the stock. You can buy a call option. You can sell a put spread. There's so many ways that you can potentially play this. Whoops, I wanted to do a short put vertical here. There's many ways that you can play this in terms of whether you're bullish on this particular stock. So let's say I want to compare a few different strategies. And one other thing I wanted to mention, this is something that perhaps I didn't mention last time. I'm sorry, I did mention, but maybe not all of you were here last time. One of the new features we recently launched into OptionsPlay is that on the strike selection, so when you click on modify for any strategy, you can select your strike price, you can select your expiration date. But on the strike price now, we have 3 columns. You have your strike price, you have the premium in terms of Swedish crowns, and then you now have a delta column. This allows you to quickly select the strike price based on deltas, because when we teach strategies, we always teach you to select strike prices based on the delta. So we created this new feature on the strike price so that you can quickly find the delta that closely matches what you're looking for. So in this particular case, if I want to buy the 25 delta, I'll choose maybe the 195 or the 200s, which are somewhere between 22 and 29 deltas. So let's say I choose the 210 to 200 put spread here. As you can see, I'm collecting 360 crowns on a 10 crown wide credit spread. That's about 36% of the width versus buying a debit spread. So maybe these are the 3 strategies that we can compare. Selling a put option, maybe I'll sell a 205 put versus selling a credit spread versus buying a debit spread. Now, each strategy has its benefits, right? A short put will be able to collect the most amount of premium if the stock doesn't move, but it has a lot of downside risk, right? So if the stock was to decline substantially, the short put has the most risk, but it also has the most potential return if the stock just stays where it is. The put spread gives me a somewhat similar risk profile to the short put. It's less premium, but it decreases my downside risk. So if the stock declines substantially, I only have limited losses. That's the benefit of a put spread. And then if the stock does rally substantially, then the debit spread is going to give me the best return, because for every 1 crown that I'm risking, I can potentially make almost one and a half, a little bit more than 1.5 times that risk that I'm taking. So depending on whether I think the stock is going to stay where it is, or I think the stock may potentially move substantially lower, or if it may move substantially higher, each of the 3 strategies are going to give me a different outcome. So sometimes for investors, to better understand the difference between each outcome is to actually trade it and see the difference. Now, here's a way that you can do that without risking real capital. By paper trading each of these trades, you can click on the blue share button, click on the save trade link. That'll generate a link for your portfolio. And what you do is you go back and you do all 3 trades. You save the put spread, and maybe you save the debit spread. And once you save these 3 trades, you can always go back at any time, go to your profile And as you can see now, under my shared trade section, I now have 3 H&M trades. I have the long call, I'm sorry, I have the short put, I have the short put vertical, and I have the long call vertical. These 3 trades that I can at any one time click on and be able to see these trades in action. I can do it for as many trades as I want. There's no limit as to the number of trades that you can paper trade at once, and you can find them all in your shared trade section. So this is where you can utilize these tools that we have built to better help you understand and analyze each one of these strategies. And you don't always have to feel that you have to pick a strategy, especially if you're still in the learning stages. You can try out all the strategies if you want. Make sure that you fully understand them before you actually start trading them in your portfolio. Does that make sense, everyone? Please type 1 into the chat window if this makes sense to you. Perfect. I see quite a few ones. This is, this is designed again to try to make your learning process as simple as possible. Let's look at a few other ideas here. Maybe let's look at some bearish ideas. Here's a stock that I was looking at earlier. Bill, as you can see, has been on a very strong uptrend, but one of the things that is starting to emerge from this trend is that, as you can see, it's broken a fairly significant trend line here. So you have a very strong trend line that's been in place since November. It's now broken this trend line, and maybe let's zoom in a little bit. However you want to draw your lines here, but this is certainly a trend line that looks like it's starting to get broken here, this uptrend. So the fact that we've broken it, retested it as resistance, and perhaps it's going to start moving lower, that's one way to draw these lines. Another way to think about this is, as you can see, it broke out above this resistance level, which tested as support multiple times, has now been broken, and is now retesting it as resistance and could potentially move lower here. So it depends on how you're viewing this, but also if you look at the trend quality throughout this period of April, May, trends were very clean and very strong to the upside. Trend quality started to deteriorate here back in late May, and then throughout June, the trend quality continues to deteriorate. That is a potential sign of a reversal to the downside. Now, there are many ways that you can play bearish plays. So when you click on the I'm bearish button here in OptionsPlay, we'll always show you 3 bearish strategies. You can look at a simple strategy like buying a put option, or you can look at buying a put spread, which gives you a better risk to reward ratio many times with a better probability of profit. And the trade-off is that you have a limited gain potential on a put spread versus a straight put will give you potential returns all the way down to 0. But in order to better understand them, I think the best way is to save these trades, and we can come back a few weeks later and we're going to look at all of these trades together. We're going to see in hindsight how each trade performed, which one gave you better returns, which one gave you, when it did work out, which ones are more profitable. And when trades don't work out, hopefully maybe one of these trades don't work out, we can see how much did we have at risk on each one of these trades. And maybe we'll look at one more bearish trade just to have 2 bullish trades and 2 bearish trades to come back to in 4 weeks time to look at and get a better sense for how these trades have worked out. Let's take a look at let's look at this particular trade. Now, this is a very interesting chart setup. You have what looks like a strong left shoulder, a strong right shoulder, and what looks like a pretty formed right shoulder here, which could potentially, in my opinion, lead to further declines here to the 212 level. And if it breaks below 212, you really have some really substantial downside here. If you look at this big head and shoulders pattern that is starting to emerge here. And if we break below 212, this really could project down to 190, 176 here to the downside. This is a really clean and classic head and shoulders pattern that's starting to emerge here in SKF. So let's take a look at some bearish plays here. Now, the first target that I would have is this 210, 212 level, which is not too much lower. That's only about 10 crowns lower from where it is today. So I would be inclined to look at a more mildly bearish play, like a credit spread to start with, looking at selling maybe a 225, 235 credit spread, collecting 370 crowns, which is 37% of the width, because the width here is 10 crowns and I'm collecting 370 crowns. That's roughly 37% or exactly 37%. That would be a moderate way to play a small move here to the downside. So let's save this particular trade. And then if I'm more aggressive, if I really feel that this stock is really going to fall apart here, that this is going to break below this down to maybe 201 or so, that's really where a debit spread is very suitable, because a debit spread gives you very clear potential. I said 201, right? So 201, as you can see, I make 141% return, risking 995. I'll make 1405, which is 141% return by August. So it's a very, very tactical way to limit the amount of risk that you take, which will actually amplify the returns if you are right on a trade where you have a strong directional view and you have a pretty good sense for how far the stock is going to drop. So for that, I'm going to save this debit spread, and then let's just look at what happens if this really starts to fall apart. Let me close this out. Let's say it falls apart, breaks below the neckline, and it starts to decline down to maybe 176 or so. And now I do think that it probably is going to take a little bit more time for such a big move to materialize. But in this world, you never know. Something could come up here. So maybe that short put, which really takes advantage of a big move to the downside, as you can see, that short put 313% for 1,200 crowns of risk. I get 3,700 crowns of profit. So if you do think the stock's going to make a big move, then buying a put option is better. So this way, now I have all three trades. I have the credit spread, I have the debit spread, and I have the straight put in my profile. And what we're going to do is we're going to come back here in 4 weeks' time. We're going to take a look at how SKF has performed, and we're going to see which strategy it was best. And hopefully between these 4 examples that we went through here today, Electrolux, H&M, Bill, and XKF, we're going to have enough variety of stocks that went in the direction that we expected to. Some stocks maybe didn't go in the direction that we expected to. Maybe some stocks exceeded our expectations, and we're going to see how each one of these strategies perform. And I see a question here in the question, why not prefer credit spreads? So credit spreads are only suitable if you expect a certain type of move. If you think the stock's going to make a big move, a credit spread is going to severely underperform. So if you go back to my example here, if I think that the stock is going to move substantially lower here, first of all, as you can see, let's compare apples to apples here. Let's say I want to risk, I don't know, 2,500 crowns, right? So now I have 3 strategies that are all roughly risking close to 2,500 crowns or shy of 2,500 crowns. This is 1,900 crowns, this is 2,400 crowns, this is 1,900 crowns. So let's first compare apples to apples. Why should I not sell a credit spread every single time? It's because if I think the stock's going to make a big move to the downside, for the same amount of risk, would you rather make 1,100 crowns in profit, 3,600 crowns in profit, or 4,000 crowns in profit? I think the answer for most investors is very clear. The difference between a debit and a credit spread is night and day for the same amount of risk, right? So if you expect the stock to make a modest move to the downside from 223 to 194, the debit spread outperforms the credit spread 4-1. So I know a lot of investors prefer selling credit spreads, but credit spreads severely underperform if the directional view that you expect the stock to move in happens, and it's a fairly sizable move. And even if you don't get a move down to 194, let's just say you get a moderate move down to 213, let's say, I don't know, 201, right? We said 204, sorry, which is that support level. As you can see, the debit spread still outperforms the credit spread 2-1. So even if you get just a modest move down to 204, the debit spread is going to outperform the credit spread 2-1. That's why you shouldn't always sell credit spreads, because if you expect the stock to move, you're going to get far more profits for the same amount of risk when you trade a debit spread versus a credit spread. Does that make sense? Please type 2 into the chat window if that makes sense to you. And if in the example, you expect the stock not to move very much. So the opposite scenario, maybe you think the stock's just going to move a little bit, maybe down to 213 or so, right? That's where you might see the credit spread is going to outperform. Here, as you can see, if I think the stock is only going to move down 10 crowns to 213, right? Just a little bit. That's when the credit spread is going to be better. For the same amount of risk, one is 1990, one is 1890, same amount of risk, the credit spread will give me 1,100 crowns in profit versus the debit spread is only going to give me 400 crowns in profit. So that's why, so your directional view is what is going to help you determine whether you should trade a debit spread or a credit spread. And I see a secondary follow-up question to this, which is how important is IV rank when you trade? And the reality is that IV rank, meaning your sensitivity to volatility, is relatively small. Even a large change in volatility. So let's bring this back here a little bit. Even a large change in volatility, as you can see, is not going to change the difference between whether you trade a debit or a credit spread. So let's just say you get a huge increase in implied volatility, which in theory should be bad for the credit spread and good for the debit spread. So let's just see. When volatility doesn't change, it's 91 to 41, right? That's when volatility doesn't change. But let's say the implied volatility conditions get worse for the credit spread. The difference between the returns, as you can see, is fairly negligible. And we're talking about a pretty sizable move in implied volatility from 26% to 33%. We're talking about almost a 20% increase in implied volatility. And even in such a massive move in implied volatility, I went from 90, what did we say? 91 to 41 to roughly, 83 to 44. So as you can see, the spread, even in a big implied volatility move, is only going to impact the P&L of your trade by a fairly small amount. Certainly not enough to say that I'm definitely going to trade the debit spread just because the implied volatility conditions are better for debit spreads. Because if you did that, you would be earning only a 44% return versus an 83% return. Versus if you use the directional view, which is delta, delta has a far bigger variation in terms of your returns. As you can see here, the difference between just a couple of crowns in changes in delta has a much larger chain effect on your P&L, which is why we do not use IV rank as our primary decider as to which strategy you trade. If you only use IV rank to decide whether you trade debit or credit spread, you're going to likely severely underperform where you would want to be, because that person who said that I'm going to trade a debit spread because I think that options are cheaper, as you can see here in this particular case, is going to still severely underperform that person who sold the credit spread, who focused more on delta rather than vega. The reality is that vega has a small exposure to your strategy versus delta has a much larger exposure to your P&L. And that's why debit and credit spreads always use your directional gauge as to which one you're going to select rather than implied volatility. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. And if this is new to you, or if this is confusing to you and you don't understand what I mean about delta and vega, that's okay. We do have courses on this to help you better understand. And that's really part of what I wanted to introduce, is that we have beginner, intermediate, and advanced courses. And in the advanced courses, we do get into option Greeks. And this is all available to you at trade.optionsplay.com/NordicEDU. I just posted a link into the chat window available for everyone if you want to learn more. But this is designed to help you better understand this is to better understand how you can utilize this particular resource that we have to help you understand the Greeks a little bit more and understand what delta and vega means and how it affects the value of your option. But this platform actually allows you to see, as prices change, how that affects the value of your option. That's the delta factor. And it also allows you to see how much vega has exposure to your position. And what you're going to see is that your positions are far more sensitive to delta than they are to vega. So don't let something with a small exposure to your portfolio affect your entire decision-making process versus using delta, which has a far greater impact on your bottom line. So that covers what I wanted to share with you here today. I hope that this was helpful in giving you a better understanding as to how we're looking at the broader markets, but more importantly, how you can use the OptionsPlay tool to take ideas that you have in the markets. And I know we all have ideas all day long. That's all we get all day long. Whether you're watching the news, whether you're following research from your brokerage platform, you're getting ideas all day long. The question is, how do you profit from those ideas? And more importantly, how do you control your risks when your ideas do not play out or they're wrong? So options is a tool that allows you to control your risk. And you want to understand the different option strategies that you have at your disposal. And one of the best ways to do that is to actually trade them. And with the paper trading feature I just showed you, you don't have to risk real capital to trade and test out these strategies. Take the different ideas that you have. Some ideas, you think the stock's going to make a big and fast move. Other ideas, you think it's going to be more slow, maybe more mild, and you're going to test out the different strategies and see how does one perform in different market conditions. What happens if it goes in the direction I expect it to? What happens if it exceeds the directional view that I have? And what if it goes in the exact opposite view? How do I have, how do each of the strategies perform and how do they protect me on my downside? So I'm really glad that we got to spend a little time here today talking through 4 different ideas. We placed something like a dozen or trades or so across these 4 trades. You know, at the end of the day, none of us know where these markets are going to be 4 weeks later, but we're going to come back 4 weeks from today. We're going to look at these trades together. We're going to test out the different strategies and show you which one worked out, which ones didn't, what was good about them, what was bad about them. We're going to discuss that here in 4 weeks time. And I'm really looking forward to doing that here with you guys and giving you a deeper understanding of these strategies. So with that, as I said, thank you so much for your time here today. What I'll do is I'll open this up for Q&A and I'll try to answer as many questions as I have time for before I have to leave. So if you have any questions, please type them into the Q&A section or type it into the chat window. Yes, you're very welcome. Yes, I do think that it is much better to be able to see the deltas in the strike column. It makes selecting your strikes much, much easier and much faster, similar to what you would be able to do on an options chain. Tommy, at the moment, we do not provide a developer API. If you can tell me kind of what kind of APIs you're interested in, we can take a look at what we can provide, but currently we do not provide a developer API. Any other questions regarding some of the strategies we went over here today? Questions about the Nordic markets, question about the paper trading account, any of that, any questions regarding that, feel free to type it into the Q&A window or the chat window. Casey Trade is always nagging about credit spreads. It is therefore a bit difficult to learn about with new knowledge. I actually have a course just on credit spreads. It's included in the advanced course. So go to this link, trade.optionsplay.com.edu. We also have a debit spread trade here as well. If I'm not mistaken, it is in the intermediate course. So look at both. I never encourage investors to only trade one strategy over the other. Always understand both because they're used in different market conditions, right? One is not better than the other. That's the one thing you really have to understand about options, is that there's never one option that's better than the other. If there was, that's the only thing anyone would ever trade. No one would ever trade anything that's not good, right? So it's about understanding the options that you have and understanding when to use each one. So hopefully this gives you a little bit a better understanding or deeper understanding of each one so that you can be better at selecting the appropriate strategy based on your market outlook. Mats, the practical approach was great. It was a very valuable and good webinar today. Thank you so much, Mats. I really appreciate it. And again, this is not the end, right? We're going to come back 4 weeks from today. This is just the beginning. We're going to come back 4 weeks today. And that's really where I think a lot of the education is actually going to come from, looking at these trades and how they perform over the next 4 weeks. Yeah, so great. If you want to learn more, please go to this link. All of our education is available there, and there are both courses just on debit spreads and credit spreads. It'll give you a deep dive into both. If there are no other questions, I just want to thank everyone for taking the time out here this evening. I hope that this was helpful in giving you a better understanding of a recap of the current market, as well as how we can use the OptionsPlay platform to paper trade the markets to better understand it. And with that, I'll end the session here for today. And I want to give everyone some time to look at the education here today. Hopefully you have a chance to review the beginner intermediate courses for whatever is suitable for you. And then I will see you guys back here in 2 weeks' time on our next option selling credit, cash secured puts webinar. This is where we're going to learn more about cash secured puts. And then 4 weeks later, we're going to come back and review these trades. So with that, thank you so much. Have a great night. We'll send out this recording to you as soon as we're done processing it. And I'll see you guys here in 2 weeks' time. Have a great trading day.